Stocks are doing much better today, but earnings could be another story. Joining me is Jonathan Corpina to talk some retail. Hi, Jonathan.
Good morning. How are you?
Doing well, thank you. I make sure I say well, not good anymore. But as far as Kohl's, the reaction to their earnings, some other retailers, Dress Barn closing, what are your thoughts? Is brick and mortar in trouble again?
That's a conversation that we continue to have, and it seems like it's somewhat cyclical, right? I mean, we talk about, brick and mortar going away, and then, there's a headline that comes out that we see that there might be some expansion there, and now the feeling is going back that other way. I think at the end of the day, when we talk about retail and brick and mortar, it kind of comes down to one thing, and it's what does the consumer want? What does the consumer feel comfortable doing? And I think there are still two camps that are there, right? There are the online, venturers who only shop online and want to do everything online, and then there are the ones that need that that textile, that tangible interaction when they go shopping. So I don't think brick and mortar will go away. I mean, clearly we are seeing that shift, and clearly we continue to talk about Amazon when that comes into play, in Walmart, and how they've really changed that landscape and the user experience.
Yeah, Walmart definitely took one for the team in that sense, taking Amazon on. Do you have any comments on Fed Chair Jerome Powell's concern about rising business debt?
I think in this time that we're in right now, businesses have to make real strategic decisions, right? I mean, they're in it for the long haul. They want to be in it for the long haul. Money is relatively cheap at this point, and as we continue to talk about interest rates fluctuating, businesses, and even could translate to homeowners, when you're talking about purchasing a home or refinancing a home, is it the right time to take on debt? When is that right time? Not sure that there's ever that right time, but as a business owner, as a small business owner or a large business owner, you have to use those opportunities when interest rates are falling in the right spot for you to take on that debt, and that debt then translates to expanding your company and growth, whether that's acquiring another company, whether that's investing in your own infrastructure or investing in your employees to help grow and expand.
So you're not as concerned about it?
I'm not as concerned about it. I think, on a macro level, I think consumers and businesses learned a very expensive lesson back during the financial crisis. So I think taking on more debt now is something that people do wisely, and they make sure that they plan it out the right way. I don't think it's a rogue type of take on as much debt as you can.
Okay, so lesson learned. Jonathan, while we are up today, there's still a lot of uncertainty floating around in the global market. Some people are saying that gold should not be so flatlined, and they are suspecting that there's some manipulation in that market. Are you suspicious about gold's price action or any other asset?
I'm not. I don't know if there's any manipulation going on or the activity that's there. I mean, clearly gold has been what investors feel is a safe haven at certain opportunities. And you, once again, we'll go into that cyclical conversation where, investors feel comfortable in U.S. equities. And then when turmoil comes, they shift that to some fixed income and to some gold. I think what we've been seeing right now with the U.S.-China relations clearly weighing on our markets. Gold should be an area where I think investors would feel a little bit more comfortable. But at this point, we haven't seen that large flux going into gold, and I think that's why we've seen somewhat of a stabilization in gold prices. I think overall, we know and we feel that there is going to be a deal in place between U.S. and China. It's a question of when, and knowing that there is a finish line, I think takes a little pressure off the investors, a little bit less fear that's out there.
And they need a lot of water before that finish line.
There's a lot that's going to happen now. Clearly we're getting close to halfway to the year. I think investors would have been much happier with something settled in the first quarter of this year. I'm just hoping this doesn't get pushed till next year. Clearly the end of June, we're going to have information come out of G20. I'm sure it'll be some sort of positive direction, but I don't know if it's going to be the real full push that's going to get us over the finish line.
All right, well, that's TBD. Thank you so much, Jonathan. See you next week.
Thank you. It was a pleasure.